The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, everybody. Doug Mitchell here, Ogletree Financial. Want to thank you for taking the time out to be with us today. We've got Jean Perez from Allianz Life with us. And Jean is going to talk to us a little bit today about the recent changes to the Life Pro IUL product that Allianz puts out, a very competitive IUL product that we're seeing a lot of traction with right now. She's going to talk about the Life Pro. She's going to talk about some changes that we've seen in the industry as far as 7702 goes, and then also some updates on the AG 49 reg. So we are recording this. We'll have it later available to you. But Jean, if you want to go ahead and kick this thing off, we'll try to be brief, maybe 30 minutes or so, and let these guys get back to work.
All right, let's do it. Thank you so much. I appreciate the introduction here. So I'll just give you a quick intro of who I am. My name's Jean Perez. I'm one of the regional sales managers here at Allianz Life in the Life Distribution Channel. And I recently relocated from the home office, which is up in Minneapolis, Minnesota, relocated down here to Miami. So not only do I cover the whole state of Florida, I cover Alabama, Arkansas, Mississippi, Louisiana as well. So I'm kind of in the Gulf region, or the Southeast territory, if you will. If you guys or gals are writing business across the whole country, we have 7 different regional sales managers. I'm just one of the 7. So we can definitely send out a grid at the end of the day to make sure you guys know who your contact people are at the home office. But what we can do for you, we're here to partner. We want to be completely additive as an extra resource for you to help you grow your IUL business, whether it's product training, product positioning, or maybe you just want to learn a little bit more about, hey, what sets Allianz apart? Why should I be taking a look at this product? Competitive updates, anything like that, we're here for you. So very excited to work with you moving forward. And so far I'm loving Florida. So if you're ever in the area, let me know. Would love to do face-to-face visits again once the world goes back to normal. But like Doug said, we're going to kick it off really quickly, and I'm not going to go through every single slide today just for the sake of time. I want to make sure there's enough time at the end, maybe if there's questions or if something I didn't cover that you want me to go more in depth on, let me know. Feel free to type into the chat box or unmute yourself. But let's just kick it off. I wanted to give a deep dive into some of the product features and what sets Allianz apart from some of the other IUL carriers in the space. And then we'll touch on some of the rate options that we have. We literally give you 15 different allocation options. So I would say right off the bat, that's one of the things that definitely sets us apart. I know a lot of the carriers out there, actually, when you look at the IUL space, about 85% of those carriers are allocating monies to the S&P 500, whether that's a cap, monthly sum cap, or an annual point-to-point cap. That's great. We offer that too, but where we really set ourselves apart and where we specialize is with our volatility controlled indices. So you may have heard the name the Bloomberg allocation option or the PIMCO allocation option. Those are 2 of our volatility controlled. They're proprietary to us, so only Allianz annuity or life clients can get access to them. And hands down, they have been performing phenomenally year after year, even when we looked at year-over-year reports back in March, April, during all that market volatility last year with the pandemic. We had clients lock in gains over 18%. So I'm going to show you some of those numbers today. It's really exciting to have that positive story to share in a really crazy, rocky year. So number 1, it's our allocation options. We have 15 different options, and that's not to confuse you or your clients. It's just because we really do believe in diversification. So if you like the regular S&P, that's always going to be an option with us. We've got NASDAQ, Bloomberg, PIMCO. We'll go in depth on those in a little bit. You can allocate to as many as you want, and each year on your anniversary, you can change those allocations. Index lock, I touched on this earlier, but what that is it basically allows you to go in and lock in gains at any point that you want in the calendar year. So this is a huge advantage, especially if you're writing bigger cases. Maybe you're looking at getting into the premium finance business. You want to make sure that you are at least keeping in line with what we've been illustrating to make sure the client has a positive experience. So instead of having two random dates in time where you can see any type of gain, right? You have your starting index value and you have your ending index value, and those are two random points in time. Now we give you literally 365 days to get the type of gain that you want, because you can click to lock in at any point. Say you issue a contract January 1st, you want to look online in June, you're only 6 months in, but you see the index is up, let's just say 10%, for example. You can click to lock that in June, and then when the contract comes up on renewal, December 31st, that's when we would credit that 10%. Then the new starting index value for year 2 starts on the new date of the next year. It doesn't start from where you locked it in. So that can be a really big win for you and your clients, but it also can be a double-edged sword. So I'll be transparent about that. Whatever rate you lock in is the true rate that the client's going to get at the end of the year. So if you lock in at 10 and then by end of December, if the index goes up to 15, in that instance, we still give the client the 10% credit because that's what we locked in, and we always honor that. But we'll get into more details there on how that's fared for us and how our clients have been liking that feature. We are the only index IUL carrier out there that offers this. So I know it's bigger on the annuity side of business. In the IUL space, we are the only company that has that, and I think that's one of the major things that definitely sets us apart as well. The third thing on the list, we have new bonus opportunities. Now with the new AG 49A regulation that went into effect mid-December of last year that Doug mentioned earlier, we are a little bit more limited. We cannot illustrate guaranteed multiplier bonuses anymore. So it's just regulators wanted to make IUL carriers all kind of play in the same sandbox, so there's not any big outliers out there, and we're not promising these, you know, ridiculous rates of returns that are not going to be realistic. So they're making us take a much more conservative approach. So right now our max illustrated rate is 6%. Even with that, our story is still good, so we'll show you some numbers there. And then another interesting thing that we do, I believe we are the only carrier that has an indexed or a participating loan rate that's a guaranteed 5%. That's pretty low industry-wide, and if you compare us to a lot of the other carriers out there, we are one of the lowest cost IULs in the business. Just to give you an idea of what our target market looks like, our average issue age is about 45 years old, and our average target premium is about $15,000. So when you look at the rest of the space, we are normally taking larger cases. $15,000 is quite large for an average IUL. And then, of course, we've got our living advantages as well to keep us competitive. Chronic illness, accelerated death benefit rider, those types of things are all built in to the contract. Where we really do excel, though, is all about the accumulation potential. So it's really all about cash value accumulation with us, and then, of course, living advantages on the side. So for you, what types of clients would look like the right fit for one of the Allianz contracts? We only do one product, by the way. Our whole life distribution team sells one product. It's called the Life Pro Plus Advantage. And we closed the year last year in the number 2 spot for all of IUL carriers out there. So we thought we were pretty proud of that, considering a lot of the other big players like Pac Life, John Hancock, they have a lot of different life products out there. We only have one, and we're kind of the little guy fighting our way to the top, but to close the year at number 2 was really awesome to see. All year long, we were about 25% ahead of plan, and even with the new regulation that came out that, you know, made everybody's illustrations not look as good as what they looked like last year. I believe at the beginning of last year, we were illustrating a 6.9% rate of return, and now that's cut down to 6 just because of what's going on with the regulatory environment. I still think that's a pretty good feat. January is starting off really well right now. So what's the target market? Your Henrys, your high earners who are not rich yet. So maybe somebody in their late 20s or 30s that have been phased out of Roth IRA contributions, and they really want to see that tax diversification in their portfolio. Obviously, the affluent are always a good fit if they have a need for a death benefit protection and they're just looking to diversify their full portfolio to get more tax advantages down the road. We see a lot of transition boomers. A lot of big 1035 exchanges from an IRA to an IUL sale. So we have a lot of different marketing pieces that go through that concept if you're interested in learning more about that. And then, of course, a lot of small business owners as well. We're going to cut through here to kind of make sure we have time. I don't want to insult anybody's intelligence by going through, what are the benefits of IUL in general. Of course, it's the death benefit protection is a major piece. And then you've got your living advantages as well as your zero floor. Zero's your hero, but you can also earn some pretty significant gains as well along the way with your accumulation value. So from last year to this year, we made a quick little upgrade to the Life Pro Plus product. Last year we had 2 different bonus opportunities. This year we now have 3 different bonus opportunities, and you can diversify into all of them if you would like. There's no shortage of choice there. So I mentioned earlier, we have a lot of indexes. Our fixed interest right now is guaranteed at 4.25%. So if you're ever coming up in competition with a whole life guy or gal, just know that our fixed interest is already off the bat 4.25%. Now, we believe we're bullish on these products, and I've seen the returns because I look at all of my in-force block of business with a lot of my top advisors across the country. On average, if you look back from 2006 till now, every single Life Pro Plus product we've ever written from then till now, the average rate of return is 6.98%. And we have a marketing piece that shows that. So I believe we can do a little bit better than the 4.25, but just keep that in mind if you have an ultra conservative client who is a little bit shaky about the IUL space and doesn't know much about it, and they want to see basic guarantees from a whole life perspective. Make sure to definitely talk about that fixed rate. Then the S&P 500, we've got blended, which is just a diversified mix, including the Dow Jones, and then you've got Russell and the Euro stocks in there in purple. Going up to the top 2, the blue and the green color though. The Bloomberg is a little bit trickier when you're trying to explain it to a client because again, it's volatility controlled. But the way I simplify it is you have 2 buckets of money, right? So within the Bloomberg index, you've got an equity bucket and then you have a fixed income bucket. The equities are literally just tracking the S&P 500. So when the S&P 500 is doing really well with low volatility, like it was, for example, in 2017, you're capitalizing on getting really nice gains. So I remember looking in 2017, checking to see the weightings between the bond and the equities, and it was like 99% vested in the S&P. So that's how we capitalized. Some of my fixed index annuity clients saw like 20% returns that year. Obviously, we're not promising that or illustrating that by any means, but I saw it be done. So you're not losing out on the upside. What's awesome is that on the downside, when markets are really shifty and really volatile, like we saw in March of last year, for example, it's going to slowly shift more and more weight into the bond component to try and protect and preserve that asset so you can at least see some sort of positive return. So that's the Bloomberg Aggregate Bond Index. Actually, I haven't checked it in the last month, but throughout March, April, we were doing returns around 18%, around that range, year over year, if you were looking from 2019 to 2020. So I can show you some of those figures if you're interested to see more. PIMCO is the same type of deal. It's got the S&P 500 for equity, and the bond is the PIMCO Synthetic Bond Index, and it's been kind of right in line, right behind Bloomberg from a return standpoint. So let's just show you some of the numbers there. Before I get into more on the allocations, we have 4 different options now. Last year we only had 3. So what we added is this green color, which is a new classic flat rate bonus, guaranteed. So now instead of saying that your floor is 0 with an IUL, your floor is now 90 basis points if you choose to allocate to that option. This is the one that actually illustrates best now, surprisingly, even though that's a really conservative guaranteed bonus. That is what illustrates best. So if you're looking at running the numbers, make sure you leave it at the default, because right now it's a 50-50 Bloomberg PIMCO mix on the classic bonus. Standard is just no fee. Actually, all 3 of these are no asset charge, completely free to allocate to. Only one option is actually a guaranteed 1% annual asset charge on just the portion of the money that you choose to put into this select index. These 3, again, no extra cost for it. The standard blue color just gives you really, really high caps, really high par rates. Right now, the participation rates are up to 161%. So a lot of our advisors are happy with that. They don't want to take on the risk of making their clients pay any extra money. aside from the regular cost of insurance, of course, and the regular policy administrative charges. So they go with that really high par rate. Otherwise, if you like the idea of getting a little bonus but not having to pay a fee, choose the bonus option in purple here. It's a guaranteed 15% on top of whatever your index does. Or on the far right, I am, again, very bullish on these products. I think we can do over 6% on average. So I'm opening up my own policy. Actually, I'm signing the applications today on myself. My first IUL, I'm excited about it. I'm putting everything into the select because I believe, I've run the numbers. When you back into the numbers, even though you're paying that 1% asset charge, if you believe the IUL can do better than 4%, basically 4% or higher, then you're actually, your best bet is to go with the select because it is that guaranteed 40% on top of whatever the index does. And those uncapped par rates are still really nice. They're up to 135% right now. So instead of throwing all those numbers at you, let me just go back and show you real quick. Hopefully this is big enough. This is what our rates look like as of January. So I'm looking at the far right-hand column here. The select is the one that's the big 40% bonus with the fee. So I'm going to be choosing the Bloomberg and PIMCO at 135. So whatever the index does, obviously you get 135% of that. Plus, don't forget to add that big 40% bonus on top. Again, both of those two indices have been performing very, very well. We're happy with it. If you don't want to take on that extra risk, take a look. This is like the highest par rate I've seen at Allianz so far, at least in the life space. I know last year we've had a little bit of rate changes here and there just because of the market environment, but 161 is, again, very competitive. The only reason we're able to afford such high uncapped participation rates is because we do our own dynamic hedging in-house. So that's something that's, again, very rare when you look at us compared to the competitors. We don't have to go across the bank. When your client gives us premium and we allocate a certain amount of that money to our options budget to try and buy caps and par rates to get the best rate we possibly can, we don't have to go and pay markups at an investment bank to go and do that for us. We actually brought it in-house. So that's something we changed up back in 2005. We were doing our own, doing what every other insurance carrier is doing, having to go and rely on the investment banks to do that type of thing for us. And what we happened to notice was, hey, you know, they're charging us markups anywhere from 15 to 30 bips on a huge block of business, a $30 billion block of business. Why don't we just take that $30 million, bring it in-house, buy our own traders, have our own hedging desk? So that's what we did, and now we actually do the hedging for our global parent company. We're in 70 different countries. If you've ever been up to the Minneapolis home office, we do all of the global trading from that office. So that's something we're proud of, and that saves us a lot of money every single year. That's how we can go out and afford to buy these very high rates. So just a little history lesson there on the Allianz story. Let me get back to the session here quickly. I don't really love this slide because I think to me, it's a little confusing, but it's just kind of giving you a different breakdown of all the different allocation options we have. Again, with the rest of the IUL space, 85% of these clients are allocated to an S&P 500. Well, how does that actually turn out when, on average, if you look at the historics, the S&P is going to zero out like once every 5 years, roughly? And that can really impact your policy in those early years. Why not offer more options? You can diversify into everything if you want and throw some money into the fixed account at 4.25, guarantee that you don't see a zero. And now you're more well diversified to avoid those zeros. Obviously, we can't guarantee that you're 100% going to avoid it unless you put some money into the fixed account. But on top of that, you now have the added layer of the index lock, right? So you have 365 days to control the gains that you want to see. I gave you an example in the beginning, but for those who maybe had just joined in, let's just say you issue a contract January 1st. You log in September, you're only 9 months in, but the index is up at 108, right? It started at 100, now it's up to 108. You say, my client's happy with that, I'm happy with that. It beats the illustration, right? Because right now we're only showing 6% rate of return. So let's just lock that in. At the end of the year, we credit the 108, but what happens in year 2? the new index value starts at 102. It starts from whenever the new year begins, not from when it was locked in. So that, again, I mentioned that can be a really nice feature to have the upside to not next year have to overcome a much higher mark. On the flip side, because we have our compliance slides here, that could be a double-edged sword, right? Next year hits, you start at 102. Let's say you log in June and you lock in the 108. Well, what happens at the end of the year if the index goes up to 110? We credit the client the 108. The year 3 now starts at 110 in this example. So make sure when you're positioning this with clients that they understand both sides of the spectrum. That's very, very important. But either way, we have not heard any complaints. We've had, since during all that volatility last year, we had 32 clients lock in policies. And of the locked in policies, the average rate of return was actually north of 10%. It was 10.2%. So we're very, very happy with that. That's an average number, right? So a lot of these clients are getting higher than 10, some got lower, but an average rate of return, that's a good story that we definitely want to make sure we're showcasing and sharing to the field. If you don't like the idea of lock, I know some advisors don't. They don't want to manage it on their own. They don't want to have to keep tracking the indexes on our website. We are in Q2, we're going to come out with a new feature called auto lock, where you can do this on the application right when you're having the meeting with the client on the front end, and you say, hey, if this index ever hits 10 or 13 or whatever the number is, you want Allianz to take ownership and auto lock you in. And then we can certainly do that. Every year you can change whatever rate of return you want, or you can choose not to use the feature at all and just wait till the end of the crediting period and see what you get. Where we see this being utilized most, though, is when you're maybe 1 or 2 months out from your ending anniversary and the markets start to get shaky. So a pandemic hits or an election hits. The market starts to get volatile and you just want to call your client and say, hey, this is a quick reminder. We have this feature on here. It doesn't cost us any extra money to lock it in. We can do it online from the website. We don't need to chase down and get wet signatures. You don't have to do it, but I'm letting you know you're up 14% right now. We don't know where the market's going to go by next month. You want to just lock in that 14 to mitigate that end of year market volatility. Most clients are happy with that and they lock that in. So just something to think about. If you end up doing a lot of business with us, which we hope you do, you have your own index lock report for the meantime before we do the automated index lock. So it's just called the index lock report right on our website. You'll pull up your full book of business, all your in-force clients. It combines life and fixed index annuities. And you can search by a rate of return. So you can say, hey, how many of my clients are up over 6% right now? You just type in a 6, click go, and it pulls up all of your clients in order of who's up and who's up to 6% basically in that example. So it's just a really easy way that we can train up your assistants or whatever you need to do to kind of show you how to use that. Feel free to call me and we can schedule a time to kind of run through. It takes about 2 minutes. And then at the end here, how much time do we have? I've talked your ear off. We have about 5 minutes. We have our living advantages too. We want to make sure you're aware of it. We have these on here, these different riders that are available just to stay competitive in the space with a lot of the other carriers out there. But again, where we really sing is our cash value accumulation. That's why I spent so much time talking about all of our allocation options. But either way, we have a chronic illness accelerated death benefit rider. It's a little bit different from a lot of the other riders out there because we don't charge you automatically from day one. We actually only charge you if you decide to use that rider. So I think that's a huge benefit. So you're not getting all these fees deducted from your account for a benefit that you may very well not use down the road. But then you're still covered if, God forbid, something happens to your client at age 65 or 70 or whatever happens and they need money quick, we have that available for the chronically ill or cognitively impaired. The criteria is basically it just has to be a continuous 90-day and the doctor would have to sign off on that. And what we do is we allow you to accelerate up to $250,000 or 25% of your face amount, whichever number is lower. And then at that time, if you do decide to trigger it, that's when you get charged a discount rate on using that rider. So let me see if there's any other questions. The other thing I forgot to mention, it's really important, I should have led with this. We're also one of the only carriers out there with our participating loans. It's a 5% guaranteed rate, right? So you know it's going to be 5% today, and you know 30 years down the road it's still going to be 5%. When you're comparing us to other carriers, make sure you're checking to see if they're offering variable index loan rates. A lot of the carriers out there are doing variable loans, starting off at a lower number like 5 or 6%, and then all of a sudden popping it up to an 8% down the road. So that's something, again, that can really impact your client's experience negatively. And the last thing I'll mention real quick, we have a lot of flexibility here, so we allow you to blend your loan types. If you have an ultra conservative client and they just want the fixed wash loan, right, that's free, they can choose a fixed loan. They can even do a 50-50 split, fixed and then 50 into the index. Maybe they don't want to pay the full 5% on the full loan amount. You can mix and match. We also allow you to allocate separately between your accumulation value and your loan value. So that comes into play. I think that's a really cool feature, very, very unique in the space. If you're going to have a different money mind for your accumulation value, right? You want to shoot for the moon and the stars. You might want to go for those uncapped Bloomberg participation rates with the big bonus on top and pay that 1% asset charge. But on your indexed loan, you might be more conservative, right? You have a different money mind for that money because you already have to overcome a 5% loan rate there. And you want to make sure you can maybe see some positive arbitrage. So maybe you want to put some money into the fixed rate, which right now, again, is 4.25, and maybe be a little bit more conservative with those allocations. So just something to think about, a little bit different in the space. I believe maybe there's one other carrier that offers the flexibility to blend those loan types. But always here to partner with you guys. If you have questions, I have a couple minutes. I just talked your ear off for a while here, but Doug or anybody, let me know if there's any questions in the chat box.
Yeah, so I'll read a few. The index lock, does that work with all of the allocation options, or
good question? I should mention it does not work with all the allocation options. So let me pull this up. It is only available on the Bloomberg and the PIMCO, just those two at the top, on the select or the bonus. So these four, 1, 2, 3, 4 that I highlighted, the 135 par rate or the 140 par rate. So you can't lock a cap. If you wanted to just choose an S&P 500 cap, that's a 10% cap right now. If you choose the standard, no fee, no locking though. So you're just waiting at 2 random points in time for that one. So yeah, just keep in mind the bonus one is the one that's free. So it has a little bit of a higher par rate actually with a smaller 15% bonus, but yep, you can lock that.
Okay, so not the classic. The classic,
not the new. Classic. The classic is just the new one with you get these nice rates, but a little bit lower than the others, but you get a guaranteed 90 flat bonus floor no matter what. Even if the index does 0, you still get 90 bips.
Okay, and then we had a question on the bonus. Does that start the first year, that the guaranteed bonus?
Yep, if you choose to allocate to one of those bonus options, then yes, absolutely. Any year that you choose any 3 of these, that starts right away, year 1.
Okay,
yep.
Great. And one last thing, you mentioned you had the average return piece that you could send out to us. Could you get that to me so that I can distribute that to everyone?
Yeah, I think that's a huge selling point because we're only illustrating 6% right now. And I know the regulators are trying to do what's in the best interest of clients, but to me, it does seem a little bit crazy that we can't illustrate true guarantees. I mean, these multiplier bonuses are truly guaranteed. I'm going to have to find it, though. I'll email it to you for sure. It's a really
that'd be
nice
great.
piece.
Okay.
Yep.
Well,
anything else?
Jean, I think that's got it. We really appreciate the update. And guys, let us know if we can help you with your cases. We'd love to be able to run some illustrations for you. Thanks for being on the call. And Jean, we appreciate you being here for us today.
Thank you, Doug. Take care.
And thanks, guys.
Bye-bye.